Alright, welcome back to another episode of my trading vlog where I try not to say I told you so too much, but again, I did tell you so. All week I've been saying Friday was going to be a bad day, that I didn't expect economic data to come out very good, and sure enough it didn't. Unemployment claims are up, jobless claims are a good way to indicate that we're probably going to start moving into a more recessionary environment, and the Fed's just going to rate hikes through that, and it's going to hurt, it's going to be painful, and that's why Powell used that word. I think this downtrend that we started recently is going to continue to extend, and that we won't find a bottom for a little bit. I'm going to talk about that a lot in Capivision this week. If you want to hear what that analysis is, subscribe to Capivision, hit join below. It's $1.99 a month. You get private channel in the Discord server and also a weekly video. Those analyses are really big and they're much more accurate than the day-to-day stuff. Day-to-day action is really hard to call, but pretty much yesterday I said exactly what was going to happen or what I was expecting, and we saw most of those things met, which is kind of par for me. It's kind of boring. I don't think people like when I say that, but I don't care. So let's just hop right into starting with the market overview. As always, SPY top left, dollar strength index top right, SPXU, which is a ETF that trades inversely to SPY, bottom left, and then GLD on the bottom right. So let's go ahead and pull out the pen and just start saying what we saw. We did have a gap higher today, which was kind of a twist. I wasn't really expecting the gap up at open on SPY and the gap down in SPSU, but that's okay because at the end of the day, it really was just as I expected. Bad news, big dump. What's super interesting too is to see this close below yesterday's open. This is looking pretty bearish. In fact, this might have just been the bull trap that I was talking about yesterday. SPXU, of course, did push higher, and as I was saying earlier this week, I think it was on Tuesday or Monday, that there'd be an opportunity to take profits, which would have been here at the sell signal, and then to reposition, and ideally that would have been on open today. I did that yesterday. I exited my call position and entered into shares just so I could hold on for the long term. I am long-term bullish on XPXU. To see that close coming in above yesterday's open is a big deal. So I'm gonna be doing some more analysis on this. I think we do have a new motive wave forming here, and that this is just the beginning. It is super cool to see that we didn't even reach that initial level of support before turning higher. That just tells me SPY is still looking for more downside. Dollar strength did increase today, and I've been saying that if that strength came into play, that would be hurting the price of GLD, and that was the case. However, we actually saw an open and then a dump initially, and that gave GLD a chance to push higher, and it did. And so while the candle is red for the day, this has a pretty good semblance of a tri-star doji pattern. It's bullish. It just is. It's a good way to show that we've lost the momentum from the downturn, and I like to see this RSI bouncing at that level 30 at oversold. So perfect. This is what I was looking for. Moving on. AMC and APE still dumping. In fact, I think I see half staff formations here on AMC, and so that would imply that we have at least one more leg down, which is nuts. I know, but again, I'm looking for the total value of these equities together to come down to 970. So until we get there, I'm just going to keep saying it. It's going to keep going down. It's been the right way. Everyone's been telling you, hey, it's going to squeeze, it's going to bounce for whatever reason, whether it's OBV, whether it's some random indicator that's being misinterpreted. Those people are just wrong. They've always been wrong. I've been right. It's horrible. I know. Moving on, GLD here on the weekly time frame is looking really good, and what I'm super excited about is to see that bounce at that 158 level. Earlier this week I said if we got below there that I'd have to flip bearish, but holding this level is actually very important because what it does is it creates a nice double bottom, but it's not confirmed yet until we get a close above the intermediate peak between the two lows. What I'm hoping for is that we'll get that confirmation in the next couple of weeks, and then I'll put a price target on the board. It's likely we'll find a handle, which will be a small period of consolidation before a breakout and a push higher. And I think what's going to drive this is flight to safety as the stock market crashes. SPY on the weekly time frame as well. You're going to see my Elliott wave counts are they're here, but they aren't going to make much sense without a whole lot of context. What you can see though is this ABC correction higher. And what I've been talking about for a while is what would happen as we start this retracement. I called that top at 431, and it was just perfect, 431. And I got that from a gap 2H pattern that we saw in the last dive. So we finally hit that target, turned down, and I always say it's not the push higher that defines how bullish the move was, it's how far the retracement goes. And here, that is exactly the case. Why is it so important? Because if this is a motive wave to push higher, and not a corrective bounce, then we need to relabel this first. And what will happen in a motive wave is you will see a bounce right here at the level at which we close this week, because the high close of wave 1 is right there. It's at that same level. And if there is a close on the weekly time frame below that level, then it invalidates the motive mode. And we have to see this as a corrective move higher in a complex zigzag. I've been talking about that complex zigzag, so I'll go into that in great detail if you want to hear that analysis. It's been fantastic. Let's talk about crude oil, something else I also go over in Capivision. Last week I was saying we were probably going to look for a little more bounce, a little push higher to try to come up to this point B before we saw a continuation downward, and we did have that. We even had this nice double bottom. So light crude oil for 2 weeks, absolutely nailing it, stellar analysis, and it looks like we might actually be going down further, this being a false breakout of that downtrend. So that's all I have for this week. Just a whole lot of I told you so. I do notice that my views are down, and I really think that's because people are selling AMC and APE. It just appears that way. That's all there is to it. Bear with me. It's going to be a long, rough journey, but I'm going to keep this up, even if my views do go down, because I think in the future, looking back, it's going to have a lot of value. It already does. I'm going through my old videos now, and I'm putting together a playlist of my best analysis, because some of these calls have just been incredible. I forecasted a 70% decline in AMC when the price was up towards $40, and people called me stupid. And almost every single day I posted those videos, I had all sorts of naysayers calling me a clown, that I'd regret this, yada yada yada. All those people are gone because their analysis was simply flawed and mine was not. Why is it that no one else is looking at Elliott wave theory or Bulkowski chart pattern analysis when it is obviously far more reliable than the other analysis types that you see pushed around on YouTube, like Wyckoff? I'm just gonna call it out. And it's nothing against Rico, guys. I have nothing against Rico. So anyway, that's all I have for this week. Happy trading.